it's Adam Anderson, owner of WealthGuard Advisors. Remember that past performance is not a guarantee of future results, and we'll read the disclosures on the front end of this video carefully.
Hello, I'm Blake. Welcome.
Hey, we're talking about the S&P 500 and the big picture. First off, last week we had a distribution day on Thursday, heavy selling, very volatile day, a really indication that the market has been in a downturn. Blake, you want to expand on that a little bit?
Yeah, so we've seen about 5% correction top to bottom over about 3 weeks there. So it is something we're watching closely, but a 5% correction is something we see fairly often. Despite last year's strong performance in the market overall, we did see twice that we got a 5% correction back in February last year and then right at the end of the year. So it's not uncommon to see a correction like this. We will be watching closely over Thanksgiving. Things tend to trade pretty lightly. A lot of institutional traders are off on holidays, and we just don't see as much trading traditionally. So we'll be looking for anything major, which we don't expect to happen this week, and then coming into December, if this is going to downtrend is going to continue for a little bit longer, or if this was just a routine 5% correction.
Yeah, so I like to say that a phrase like a sucker rally. Sometimes we get suckered into a day when it's up and then it continues downward. I'm not sure that we're going to see that. I also look at the WealthGuard client indicator, and that is people that come in here panicked, wanting to get out of the markets. And that's often an indicator that we're at the bottom. And we saw a little bit of that this week or last week. So I do see that as an indicator. I did want to talk a little bit about the overall WealthGuard investment philosophy. So diversification is how we protect money. And for most of our clients, we're highly diversified. When you're diversified, you're protecting the bulk, just by being broadly diversified. You're never going to have big ups. You're also never going to have big downs. If you're properly diversified, you're kind of in the mix of the overall market, and it's a little bit more predictable. But concentration is what helps what helps an account grow. So when we throw out some individual stock names, it's more the speculative part of the portfolio. So we're blending this opportunity for growth by being concentrated in individual holdings, which you want to have. That's where we look at more technical indicators and fundamental analysis. And I want to define those things. Concentration versus diversification is what we blend together. We want some concentration, but you have to have a plan to get out, a plan to get in when you're concentrated. As diversification, we're sticking with the overall strategy. Blake, anything you'd like to add to that?
Not really, just a reminder that, there's a time and place for both strategies where, at stages of your life when you don't need the risk or you don't have the time to take on those risks, diversifying your portfolio makes a lot of sense to still allow for returns without being exposed to those company-specific risks. Whereas when perhaps you're younger or you have a longer time horizon on these accounts, maybe it's earmarked for inheritance or something, that allows you to take those extra risks with concentrated stock positions. And that's where you hear these stories of, oh, this account went up 1,000%. is from concentrated positions. So it's just a time and a place sort of thing. And that's what we work with clients to determine the best solution for their individual circumstances.
Agreed. We wanted to talk about the healthcare index, XLV, today. So Blake, this is one of the index you really wanted to focus on.
Yeah, we've seen a lot of the recent sell-off was tied to the tech industry, the whole AI industry that have done very well earlier in the year, took a big hit. There also have become an oversized portion of the market indexes. Specifically, NVIDIA is a significant chunk of the S&P 500. So any given day, if you're watching an index, you're overwhelmingly looking at NVIDIA. But that does leave room for other sectors to be opportunities when the wider market weighted heavily towards these tech-heavy names are down. XLV, the segment I think is up, and you could see this over the last couple weeks. The market was down 5%. XLV was actually up, and I think that trend is likely to continue into the end of the year. If we continue to see, sell-offs in the tech sector and de-risking from the tech sector, I think this is a place where money will be moving into and an opportunity for growth.
So when we break down the components of the XLB, which is the healthcare index of all the healthcare companies, I think one of the largest holdings is one of the ones that we talked about a couple of weeks ago, Eli Lilly. Isn't it like 10 or 15% of the index? Is that correct,
Yeah.
Blake? And Eli Lilly just crossed into the $1 trillion asset mark club. So it is continuing to have a nice run since we talked about it. And it was bringing up there as a major component moving up. But we want to talk about another component and get a little bit into fundamental and technical analysis. And that is Stryker. SYK is the symbol. And if you've been in the hospital, hopefully you haven't been in there for personal reasons, but maybe to see somebody or work there, you'll have seen Stryker crash carts, their beds. I mean, a lot of the supplies that are inside of the hospital is by Stryker. So this is a chart over the 6 month of Stryker. And so it's been this downward trend, not very positive. And one of the things I look for is maybe a change in that trend. So you'll see here, it came up and it came back down, and we now have a higher low. So here's a new higher low, and the trend might be changing here. This is another thing that I like to look at, convergence divergence, or the MACD as we call it around here, the moving average convergence divergence. And as you see, this green line is just starting to move above. The purple line is indicating a change in trend right here. So this is kind of an indicator to me that the trend might be changing. We're still looking for it to get above this old high here. And if the trend is higher low, higher high, this would be a very positive trend. I also want to break it out to a 5-year chart and take it on a regression channel. And I'm going to take it back to this previous low. And if you see here, it has come right down to this regression channel back in the low back in 2021. So this is also a very good sign. Anyways, Blake, you want to wrap us up here?
Yeah, I just like to say thank you for tuning in. This is Thanksgiving week, so we appreciate and are grateful for all our clients who take the time to and put their trust in us, and thankful for you for watching and spending some time listening to us. WealthGuard Advisors is a registered investment advisory firm, and part of that is the fiduciary responsibility to those clients that put their trust in us. And so we really make an effort to put their best interests first in every way we can. We specialize in personalized assets management, custom to you, and financial planning designed around your unique goals. So if that's something that you're interested in, we'd love to talk with you and see if we could be a good fit for your financial situation. Thank you so much for watching. We'll see you next week.
Have a happy Thanksgiving.